Fibonacci retracement. Because remember, we're looking for where is the market going to enter, and why is Fibonacci extremely important, okay? This is not going to be a course on Fibonacci. We can spend an hour on Fibonacci, but in summary, Fibonacci is used by algorithms and artificial intelligence in the market. As we know, the market there's a lot more algorithms, there's a lot more artificial intelligence in the market, and they look for area sensitivity. So what patterns, what formations, these systems look for zones, they look for Fibonacci retracements, especially the 38.2, the 50, 61.8, okay? And then it also looks for other, pivot points and other indicators, but that's also the problem with algorithms is because they look for indicators, they lag. Anyway, so let's get into it. Okay, let's go to 1C. Okay, strategy 1C is the third most common exhaustion formation. Strat 1C is powerful when either it should be a 38.2, 50, and 61.8 Fibonacci sensitivity line up with support and its demand zone. Okay, so we're essentially in normal exhaustions, right? Let's say we have a demand zone. In a normal exhaustion, we have a push exhaustion. So what was resistance is now becoming support. But in this scenario, Strat 1C, we're looking for additional confirmation as price makes an exhaustion to not only its zone, but also a significant fib. And we do that by measuring using Fibonacci extension, okay? So the reason this is so powerful is because price will not only find buy-sell sensitivity for continuational push at completion of exhaustion to its zone, but also due to technical sensitivity of its Fibonacci retracement. So let's go to the characteristics of Strat 1C. Usually forms after a long extension or push, and this is true for all our systems. One of the things that you will notice is that we get into trouble. The most trouble we got into with CAD-Yen is when we don't actually stay patient, wait for the push exhaustion. We're playing in between the zones, just trying to get in because we're expecting to move to the upside, which did happen, but we have to wait and be a little bit more patient, and that's one of the things that we're doing, okay? So usually forms after a long extension or a push, okay, which is true for all of them. Most common during stronger trends, okay? And what this means is for a Fibonacci extension, okay, for there to be a push, okay, let me, how do I explain this without making this complicated? Let's say there's an uptrend. A fib extension usually happens when there's an extension from its mean, meaning that there's actually a relative distance to area of average buy pressure. Okay, so that means when that happens, okay, this is usually a significant push, and that usually happens during a strong trend. So what I mean by my most common during strong trends is we usually will see that significant extension from its mean in a strong trend, where then we can capitalize on some sort of Fibonacci retracement depending on if price breaks its zone. When there is a low trending market, for example, price usually tends to stay closer to its trend line. There isn't any of these significant moves. Okay, so that's what it means by most common during strong trends. Okay, stop hunts happen. Okay, and it happens usually at its 31.8 or 50% fib, and we'll go over that in a sec. Okay, so let's do that. All right, so here we see, okay, our daily zones. All right, so obviously we're looking to find the trend. We have push, as you can see, stop hunt to the downside, then we see another push back to the upside. Okay, this push could be measured as a Fibonacci extension, right? Because it's a significant, as you can see, significant extension from its daily zone. So we do not want to enter to the upside here. We want to wait for exhaustion before a continuational push. So as we take it to the same chart and we start to identify, okay, this is Strat 1C. All right, we've done our fundamentals. We have a separation of 5. Okay, +3, -2, that's a separation of 5. Okay, so that's okay for Strat 1. All right, and now what do? Well, we identify extension, and then what do we see here? We see our 38.2, or we see our 50, and we see our 61.8% fib. Okay, so this red line is identifying our 61.8% fib. All right, let's bring it in a bit. This red line is identifying our 61.8% fib, and this red line is also identifying lower lows. So as you can see, strat 1C and strat 1A sometimes can mesh. But what's the difference between strat 1A and strat 1C? When we have a zone meeting up with Fibonacci extension, we know that there's going to be a significant level of buy sensitivity, not only because it's reaching area of support, right? It's area of battle between buy pressure, sell pressure, and we know that we have fundamental support to the upside, but also reaching level of buy pressure from its fib. Okay, now what do I say by many times there's stop hunts at the 38.2, okay, or at the 50? Many times when we have a significant extension, we will start to see initial buy pressure from people at the 50 and at the 38.2. But if the 50, the only time we enter at the 38.2 or the 50% fib is if it lines up with its zone, okay? So for example, if I was to do the extension and our 38.2 lined up with our zone, only then would we look to the upside at the 38.2. But because the 61.8% fib is the closest to its zone, we are expecting buy pressure, sell pressure to make an exhaustion to this Fibonacci extension rather than the 50 or 38.2. Thus, there is a high probability of stop hunts at these levels if they do not line up with zones. All right. Okay, so usually forms after a long extension, most common during stronger trends. Okay, stop hunts happen often at the 38.2 to 50%. Again, remember, many times the extensions, majority of the time lines up with the 61.8. That's why majority of these stop hunts are at the 38.2 and 50. Let's change that. It's got it bothering me. Okay, cool. All right, so oftentimes can resemble strat 1A. However, it has the addition of Fibonacci support. Remember, strat 1A, what would make strat 1C strat 1A? If there was no lineup of Fibonacci, let's say, like, for example, the 38.2 is here, 50, 60, 1.8, it was below the zone or whatnot. When there's no actual lineup of Fibonacci, that creates the 1A, okay, rather than the 1C, okay? So sometimes 1C is actually more powerful than 1A, all right? But it happens less often than 1A. All right, so strategy 1D, let's take it to the top. What is 1D here? As you can see, it is the impulse move, okay? When price reaches a zone, impulse to the downside, then we look for retest of previous high. Let's talk about that. All right. Strat 1D is tied for the third most common exhaustion. It happens roughly about the same amount of time as a proper strat 1D happens roughly around the same amount of time as a proper 1C. Milk just got so dry there. All right. Strat 1D is based on logic. Okay, it really is. When price reaches a demand zone, so in this case, a push to the upside, there will usually be what's called an impulse move to the downside. Okay, and we know that when there's a trending market, when we have fundamental separation, we know that this isn't an overall change in direction, but we know that this is simply an impulse or sensitivity off this zone. And what makes it sensitive? It means take profits are being reached, right? It's an area of sensitivity. SLs are being hit. Market orders are being placed. Limit orders are being placed. Stop orders are being placed. There's sensitivity off area of respect. This is why we call it a battleground. This is why we call it an area between buyers, a battle between buyers and sellers. Okay, so let's talk about the characteristics of 1D. Okay, characteristics of strat 1D: impulse to the downside after initial contact with the zone. Okay, we have an extension, contact. What happened here? Boom, all the orders triggered, all the shit happening, and then boom, an exhaustion. Okay, or it's not exhaustion, an impulse. But this is a relatively significant change in direction. For those that are amateur traders, they would think that maybe this is an overall change in direction. We know that's not the case. We know that this is sensitivity, a reaction off a demand zone, off an area of significance. Okay, So most common during significant extensions, okay? We really like what makes an impulse move really high probability is when there's this extension from like a trend line, for example. In this case, there's higher highs. As you can see, there was an extension, so relative significant move from its mean, okay? So that means that also all the mean reversion strategies are coming in here. And when there's an extension, there usually means that there's an exhaustion, right? Because an extension means what? It's a push. Buy pressure broke previous high. This is a push. This can also be an exhaustion. Where is exhaustion likely to begin? At next area, significant sell pressure. In this case, because it reached a zone, we're going to call it an impulse move. And we know that there's going to be another injection of buy pressure. Okay, and it's high probability when there's an extension from its mean, from its averages, from its trend. Okay, so that's what the most common during significant extensions. Okay, price will usually make its next push after the impulse move at previous high, Fibonacci retracement, or uptrend. So what do I mean by that? Let's talk about that. Okay, so this is the same chart, lower time frame. We have the push to the upside, breaking previous high, extension from the uptrend. We have contact, and boom, a significant move to the upside. So where does price usually change direction? In this, sometimes it's at previous high, okay? Sometimes it's at its fib. Here we have our 38.2. Here we have our 50 and 61.8 fib, okay? These three lines. So sometimes we have change in direction at its fibs, and sometimes we have change in direction at its trend lines. Okay, in this case, we had a full complete exhaustion to the trend line because it was a well-respected trend line. Now, we had an impulse move back to the upside. Remember, impulse moves happen at all area sensitivity. The higher the time frame, the more dramatic. So here we had a significant impulse or exhaustion back to our trend line. We had another impulse to the upside and double confirmation before another move. So our entry to the upside on Strat 1D is very multiple, meaning we require price action confirmation, so a significant pin bar or bullish engulfing candle, meaning this. We can have exhaustion that finds buy pressure at previous area sensitivity. We can have exhaustion that finds, or impulse, I should say, impulse that finds buy pressure at significant area sensitivity. We can have an impulse that finds buy pressure at its fibs. We can have an impulse that finds buy pressure at its trend lines, okay, which is what happened in this case. So it's very variable, but price action will always come in. So for example, this is a significant move to its 38.2. We know that it's still relatively far away from its trend line, so this would become invalid. Okay, boom. We have a significant bearish pin from its 50% fib, but we know that this is likely also a stop hunt. Why? Because it's not the closest fib to what? To our trend. Okay, so this is not an entry. Okay, then we have potential entry here. This is where I'd be considering entry for a buy limit order, potentially for quick in, quick out, because we know that there's going to be buy sensitivity from fundamental support and from our trend and from our fib. So there could have been a quick in, quick out to maybe to grab a few pips here. Okay, but for our longer term move to previous high, we know that we're waiting for double confirmation due to the severity of this impulse, due to the significant strength of this impulse. And we would have done so at this bullish pin at contact, maybe even placed a buy limit order, as it wasn't a significant, it looked like there was buy sensitivity looking to enter. Okay, so multiple potential entries here for strategy 1D. Now let's talk about entry conditions. Okay. So, by the way, big announcement here. Jake doesn't even know because I just got the thumbs up. I haven't even talked to him. We're going to add algo. Boom. Okay, I'll talk to you guys on that in a sec. Okay. All right. So, review strategy 1 entry conditions. And this is going to be relatively similar for strategy 2 as well. We have to review economic releases. Every week, okay, we will begin to identify the upcoming releases and talk about what that means for the market, how it could affect the market. We have to identify that. Now, we're not going to place any new entries 10 hours before any significant release, okay, on a pair that would be affected by that release. If we are already in that pair and we have to manage that pair during the release, maybe that means moving SL to entry, okay? Maybe that means moving it slightly above entry. Okay, so we have to start taking into account economics and releases, and we're gonna, as mentioned, start going in depth into actually what these releases mean and how it affects the market. Number two, we have to identify fundamentally separated pairs and create a short list. Okay, so for example, if we go through all the pairs that the 30 something pairs, maybe we find that there's 5 that have a separation required for strat 1, and then based on that, we will go and do our checklist for those 5 pairs. We have to narrow it down. What are the highest probability entries? And that also includes identifying those entries based on the economic releases that are coming up. Okay, next, we're not going to talk in depth about this today. This will be for next week. Okay, but we're going to start identifying the VIX, okay, using the VIX charts and also the algo. I'll talk about the VIX first. Now, the VIX is essentially, okay, a chart that determines, it's a Chicago board. It's from the Chicago Board of Commissions Exchange or something like that. That's where the chart comes from. Essentially what it does is it measures the fear factor in the market. If fear is high, so if the VIX is to the upside, we will see that the market has fear. And when there's fear, what happens to safe havens? Upside. When VIX is to the downside, that means there's low fear. That means there's high investment. That means safe havens are to the downside. Okay, so when the VIX is low, we can expect that the yen, the Swiss franc, and other safe havens will be low, like gold will be pulled back. When the VIX is high, gold moves up, yen moves up, Swiss franc moves up. So for example, if we're looking at an entry on CAD yen, that son of a bitch, okay, all right, if we look on an entry on CAD yen, all right, we have to identify where is the VIX at, okay, because we need to identify what is the strength of the yen, okay, not just using our fundamental separation, but also other confirmations. Now, we have an algo that's coming out. So I made a deal with the company that essentially is a pure alpha company, meaning they use artificial intelligence and algos not to place entries, but to come out with market sentiment. Okay, so we will have additional confirmation from machine learning on market sentiment. So we will see, okay, different data points, okay, that say, okay, pound USD to the upside, CAD Swiss franc to the downside, and also why, all these data points that come in from multiples. Okay, so I just got the thumbs up before the live session. I have to go out after, but that's great news. We're going to be adding that. We're going to be the only one that has that. Okay, so got that. Now, next thing we need to do is we need to identify our zones, monthly, weekly, daily, 4H, 1H. We need to identify our zones, and we need to identify them properly, because this is key, right? Zones are absolutely key to our strategy from strat 1A to strat 1D. It's imperative that we identify the zones and properly, and we need to know which zones are attached to with which time frame, because the monthly zone is much more respected than the 1H zone. That can adjust our entries, that can also adjust what strategy we're looking at, that changes also our risk. Okay, number 5, identify all potential channels, trend lines. Okay, we have to identify all that. Now, one of the examples I'll give, and honestly, I respect zones so much. I've been at fault. Okay, I'm at fault for not respecting trend lines and channels as much as I should. And the reason is this. Okay, let's say this is a little bit obvious. It's usually a little bit more hidden than this, but this is one of the reasons why we have to identify all potential channels and trend lines before entering a trade. Okay, so let's say, for example, we don't have this trend line. Okay, let's say, for example, we're only respecting zones. That means we have a push, we have an exhaustion, we would have a buy entry order right here, right? We have multiple pins, okay, back at exhaustion, we have first contact, impulse, retest, move to the upside. If we don't identify this trend line, we don't identify that there could be a potential lower low again, and we have to break that lower low. But most importantly, there's a channel here, correct? So even though we're correct on the move to the upside, we have to identify that there could be a respect, a move to the downside, which would be a stop hunt in this case, okay, before a continuational move, because it's respecting the lower level of that channel. So we have to identify, what I'm trying to say is trend lines don't need to be visible all the time. But before entry, we have to identify all channels, all trend lines, all potential levels of sensitivity for the most profitable entry. Okay. Identify targets, TP, SL, and expected entry. Okay, but that's what we do after we identify the zones, we identify channels, we do our analysis, we identify targets. We have to prepare. What are we expecting for? Okay. Number 7, create price action or limit order requirements. If we're looking, for example, this will be most important for Strat 2, which we'll go over tomorrow. Okay. But when we will be placing limit orders for Strat 2, so we would want to place those at that time. Okay. And before final entry, identify all imposing ejections or orders or counter entry arguments. So one of the things that I've been at fault at is also being too confident in all my entries, because I've had a period of time where we're very successful. Obviously, we reached a small patch, a rough patch. We'll get through that, and we are getting through that as we normally do. Okay, that happens over a span of time, and we get through it and better. Okay. The thing is that we need to form counter arguments. So, like a lawyer, a prosecutor before trial, you have to think, okay, so what is the defense going to say? What are all the things that they're going to bring up? And we have to prepare as to what we're going to counter with. When we're looking at entry and we're convinced that entry, we have to take that moment to say, okay, why is this a wrong entry? Why do I not want to enter here? Try to prove yourself right. And if you can't come up with a good answer, that means it's a good entry. But it's extremely important to take that extra 2 minutes, and that's going to be a part of our entry condition. Okay. Now, rules of engagement for Strat 1. Entry must not be within 10 hours of economic release. If you are in an entry already, we have to manage the SL. Okay. Number 2, fundamental separation must be greater or equal to than 5. So for example, we'll just use CAD USD as an example. If CAD is a +6, USD is a +1, is that a separation of 5? Yes, right? Okay, 6 minus 1 equals 5, okay? If CAD is a +4 and USD is a -1, is this a separation of 5? Yes, this is a separation of 5. Good. What if, for example, CAD is at a 0 and USD is at a -4.4? Is this a separation of 5? No, it's not. Thus, this does not equal a high probability for Strat 1. So this is not in. That's what I mean. Greater to or equal than 5. So +3 and a -2. Good. That is equal to 5. Okay, that's what I mean. We have to have a fundamental separation of 5. And the reason for this is because when we're looking for entry, let's make sense of this. What's the most important thing for all our strategies is that we have fundamental support. We have air support at our zones. It's extremely important because we're looking for entry conditions at completion of exhaustion formations. And if we have air support, fundamental protecting us, we have a high probability entry. Okay, extremely important. Okay, quality over quantity. All right, so all entries for Strat 1 require price action confirmation, okay, except for limit orders are acceptable when exhaustion reaches both the zone and trend line. Okay, so what do I mean by that? Okay, so let's just draw it out. First off, Strat 1 does have one limit order. I will adjust it. The one limit order that will happen for Strat 1 is through Strat 1B, which is a buy limit order at previous low. That's the only time Strat 1 will have a limit order, or a sell limit order if this was a downtrend. Okay, but what do I mean by, I'll adjust that, but what do I mean by all entries for Strat 1 require price action confirmation? Limit orders are only acceptable when exhaustion reaches both the zone and trend line. In the odd case, we will have a situation where we have a zone and we have a trend line, and we have a push and exhaustion where both the zone reaches the trend line. And in this case, we may look for a buy limit order due to the fact that we know that there will be buy sensitivity, not only from our zone, but also from our trend line. Okay, this happens rarely, all right? But that would be the only scenario other than Strat B entry. Okay, all inputs must be taken account of. Okay, meaning, again, zones, trend lines, okay, any counter arguments. We have to rules of engagement. We have to consider all inputs. All right, so team, that's it for Strat 1. Tomorrow we will be going over Strat 2. I'll be doing separate analysis for the chat room or for the Discord on pairs that we're in and looking at. As far as Euro Yen, still very confident in that pair. We have great SL. Okay, we're just going to ride that one. Okay, we're making progress here, team. We're moving, we're doing things to improve. The algo is going to be very, very cool. Okay, all different machine learning, condensing, essentially trying to give us high probability entries, or in terms of pairs to look at which direction as well. Okay, this is just another confirmation to our fundamental direction and other inputs we take. But again, Strat 1. So for example, if I say, we're gonna have a quiz on Friday, a quick quiz. But for example, if I say, all right, so let's say Discord sends you a notification that there's a signal. Let's say you get the signal and I say Strat 1-A, CAD Yen, long. And then we have targets. What does that mean? We expect this formation, lower lows, meaning that we can expect which type of entry we're getting. If I say Strat 1A, or if I say Strat 1D, okay, Euro USD, long. What does that mean? Impulse. We're looking for a retest previous high. Okay, so this will all be sent out, but for everybody who's a part of the membership, I want you all to start learning that. Okay, so that is it for today. I will see you all for tomorrow, where we go over strategy 2, which is going to be about limit orders and mostly consolidated pairs. All right. Again, analysis will be posted for today's interest or pairs that I'm interested in, and also updates on current pairs that we're in shortly. All right. Love you all, and I'll see you tomorrow. Thanks. Bye.
Record.